Good evening. How are you? Are you enjoying AS-10? Yes or no? Yes. So let us come to this wonderful topic one more time. Depreciation. Depreciation is the systematic allocation of the depreciable amount. Systematic allocation of depreciable amount of an asset over the useful life. If you have more than one part, then each part will be depreciated separately. If that part has a significant cost, so a car has suppose two parts. For example, part 1 5 lakh and some part 2, let us say 1 lakh. Useful life is 10 years and 5 years. So depreciation will be here 50,000 rupees and here it will be 20,000. 1 lakh divided by 5. So depreciation per annum will be 70,000 rupees. This is called component wise accounting. This is called component wise accounting. Do you agree? This is called component wise accounting. In some exam question, they ask you a problem like this. An asset has 3 parts, 4 parts. They'll give you the cost of each part, useful life of each part, and then you have to just compute the depreciation for each part. Example, it may be appropriate to depreciate separately the airframe and the engine of an aircraft. So in case of aircraft, engine and the airframe can be depreciated separately. Then parts having same useful life, if suppose there are 3 parts, part 1, part 2, part 3, the useful life of part 1 and part 2 both are 10 years and part 3 is 5 years. So don't complicate. If they have same useful life, you can club them together because ultimately depreciation will be same whether you calculate separately or whether you calculate together. So if the parts have same useful life, then you can club them together and depreciate. Next point, where will you transfer depreciation charge? Depreciation will be charged to P&L account. Depreciation will be charged to P&L account. This is generally. However, if one asset, one PPE item is used to construct another PPE item, then the depreciation of first PPE will be added to the cost of another PPE. That we have done in one problem also. Next point, for example, carrying amount of self-constructed asset or inventory. One more thing I need to tell you, if suppose there is a factory machine, it is used for manufacturing of inventory, then the depreciation is a factory overhead. Depreciation is a factory overhead, and you have studied AS2. Factory overhead will be added to the cost of inventory. Factory overhead can also be added to the cost of the inventory. Next point, depreciable amount should be allocated on a systematic basis over the useful life. So the question is, what is depreciable amount? What is depreciable amount? Come on, answer. Depreciable amount is the cost minus residual value. The cost minus residual value. Depreciable amount is cost minus residual value. Sometime it may be cost, or sometime it can be any other amount substituted for cost. Like for example, in case of revaluation, we will take revalued amount. So formula is depreciable amount equal to cost minus residual value. It can be negative also. Say yes or no. Can it be negative also? Yes or no? It can be negative also. Option A, yes. Option B, no. Please tell me, can depreciable amount be negative? Can depreciable amount be negative? The answer is yes. Let us say there is a building. You purchase the building for 2 lakh. You purchase the building for 2 lakh, but after 5 years, you find that the value of the building is now 3 lakh rupees. So at the end of year 5, when you will do the calculation, your depreciable amount may become negative. Now, if depreciable amount will become negative, then what will you do? Next question. If depreciable amount is negative, if depreciable amount is negative, will you provide depreciation? Will you provide depreciation? Everybody will reply. Usha, Sanket, Tanya, Sonam. Will you provide depreciation? Option A, yes. And option B, no. If the depreciable amount is negative, it can be negative when residual value is more than the cost. Possible. In case of assets like building, the residual value is more sometimes because the value of the building appreciates very fast. So my question is, the intelligent student will answer, if your depreciable amount is negative, will you still provide depreciation? So this time you should say no. Suppose it is 2 minus 5, remaining life 3 year, minus 1 can't be depreciation. Minus 1 cannot be depreciation. Saurav is right. Chaurasia right. Usha right. Minus can't be depreciation. Then stop providing depreciation. Till that year, when residual, when the depreciable amount becomes positive. So in those years where depreciable amount is negative, do not provide depreciation. Okay. What about residual value? How is residual value calculated? So suppose I have got a machine. Example, I have a machine. AS-10 is saying take cost minus residual value, and I estimate the useful life to be 8 years of this machine. So today I will go to the market. Theoretically, or just for understanding, I will go to the market, and today, what is the date today? Let us say today the date is, for example, 28th October. So I will go today and I will check from the market what is the value of a similar 8-year-old machine. What is the value of a similar 8-year-old machine? And that will become my residual value. So my residual value is based on how much is the value for an asset which is expected to complete the useful life which you are estimating. Okay, so that is useful residual value. Residual value of an asset is the estimated amount that an enterprise would currently obtain, underline, would currently obtain from the disposal of the asset after deducting the estimated cost of disposal if the assets were already of the age and in the condition expected at the end of the useful life. So today I bought a machine for rupees 1 lakh. I repeat the example. Today I bought a machine for rupees 1 lakh. I estimate useful life to be 8 years. So its residual value will be what is the value of an 8-year old similar machine today. What is the value of a similar 8-year old machine today? That is the residual value. I have to find from the market. What will be the value of 8-year old machine today, and that is residual value. What mistake some people make in the interpretation, they think how much amount I will realize after 8 years when this machine will be sold. The correct interpretation is how much is the value of a similar 8-year old machine today. Anyway, so you will be supplied with residual value and then you will deduct residual value in the calculation of depreciable amount. Next is useful life. What is useful life? Useful life means the number of years for which the asset is going to be used by the entity. Number of years for which the asset is going to be used by the entity. Okay. So it is the period over which the asset is expected to be available for use by an enterprise. Tell me, is useful life equal to physical life? Is useful life equal to physical life? Is useful life, what is useful life? Let us say this is the laptop which you see every day, or you are not able to see, because if I remove it to show you, the system will stop. So assume there is a laptop here. I am going to use it for 3 years. Then I will change it. I will sell it. I will purchase a new laptop. Physical life of this laptop may be 20 years. This laptop will survive on this planet Earth for 20 years. So useful life and physical life are not same. Okay. Another question for you. Please reply because you are a learned student. Whether useful life is equal to economic life. Whether useful life is equal to economic life. Option A yes, option B no. Whether useful life is equal to economic life. Please reply. Most of you are not replying. You are just coming and watching the show. The answer is, come on, useful life is not equal to economic life. Why? Let us see. This laptop which I am using, it can be used for 6 years technically. Technically, it can be used for 6 years, but I am going to use, Vino Limited is going to use it only for 3 years. After that, it will be sold to Moonrise Limited. After it will be sold to Moonrise Limited, Moonrise Limited will use it for 3 years, and then this laptop will stop to function. So its economic life is 6 years, but for the entity useful life is 3 years. So the answer is Khushbu Maheshwari. The answer is useful life is not equal to economic life. It may be equal to, but it may not be equal to also. So the correct answer be maybe. Okay. Useful life usually is defined from the point of view of period. Then useful life can also be defined in the form of number of production or similar units. In case of, let us say, a projector, the projector will work for 3000 hours. So here the useful life is not in terms of years, it is in terms of hours. Or for example, a printer. Let us say there are printer which can print 1 lakh prints. Certain specific type of printer, their life is quantity of prints you will take out. So in that case, the useful life will be 1 lakh prints. Okay. So in a year, if I am using 600 hours of projector, my depreciation will be based on 600 divided by 3000. If in a year I have printed 25,000 prints, then my depreciation base will be 25,000 divided by 1 lakh. Now one student is asking what is the difference between useful life and economic life. Although I had explained it to you, but due to lack of attention you missed it. I am going to use the laptop for 3 years. Moonrise Limited will also use for 3 years. ASF 3 years, Moonrise 3 years. After that, this laptop cannot be used. So 6 year is economic life, total life for which the asset can be used, and 3 year is useful life for ASF. 3 year is useful life for Moonrise Limited. Is it right? So that is about useful life versus economic life. And physical life means its physical existence. You can keep it in the home and your laptop will remain for 100 years also. So that is physical life. Okay. The standard says because these numbers can change, residual value can change, useful life can change, there is an responsibility on the organization. You have to review every year. Review every year, at least in each financial year. Why? Because residual value can change. Useful life can change. Okay. So suppose I purchased a machine. Initially, I may have estimated useful life 15 years, but after 3 years, a better machine is available in the market, and I am thinking of purchasing that other machine. So I will say, oh, no, no, 15 is too much. I am going to use it for 10 years only. So I have revised my useful life from 15 to 10. Possible. Due to change in technology, due to change in demand, due to wear and tear, the useful life can change, and same thing can happen with residual value also. You may have taken residual value of a 3 year old laptop to be 20,000 rupees. But later on, as you know, the price of laptop, mobile, and electronic equipment can change. You find that no, a 3 year old laptop will sell for 10,000 rupees only. So, therefore, residual value can change, useful life can change. So when useful life or residual value change, you need to revise depreciation calculation prospectively. You need to revise depreciation calculation prospectively, and this is called a change in accounting estimate. Change in useful life, change in residual value is called change in estimate, and whenever there is a change in estimate, the depreciation will be calculated prospectively based on revised life, revised residual value. So next point is charge of depreciation should start immediately when the asset is underlined available for use. When the asset is available for you use. So the date from which the asset depreciation starts when it is available for use. Actual use is not important. Actual use is not important. Now, say for example, you purchased a generator set on 1st April 2022. So it is available for use from 1/4/22, but there was no power cut only. If there was no power cut, you will not use generator set. First time the power cut occurred on 1st May 22. So for 1 month, generator set was lying idle. Will you provide depreciation for? Question for you. 11 months or 12 months? Option A, 11 months. Option B, 12 months. Will you provide depreciation for 11 months or 12 months? Quickly answer. So the depreciation will be provided for full 12 months. Answer is B, 12 months. Saurabh is right. Nikhil is right. Sanket, Tanya, 12 months is right. Khushbu Maheshwari, 12 month is right. Okay. So sometime in the question, two dates may be given. Available for use, put to use. The depreciation meter starts from the date the asset is available for use. Now depreciation should be charged. Next point, Usha 11 is not right. Depreciation should be charged even if the asset is idle. Depreciation is charged even if the asset is idle. Idle means you have not used it. You have not used it. Okay. So suppose this is my factory 1/4/2020, 31st March 2021. Due to corona, my factory was closed up to 31st July 2020. Oh my God. 4 months. This machine remain idle. 4 months machine remain idle. Real life question. Question is, will you provide depreciation for these 8 months only or 12 months? Option A, 8 months. Option B, 12 months. If suppose due to lockdown for 1 month, asset remained idle, no activity, what about depreciation? Your institute has also clarified on this. The depreciation will be provided for full 12 months. The depreciation will be provided for 12 months even if the asset remain idle for some time. Okay. One more point. Depreciation should be charged if the asset is retired from active use. Depreciation should be charged if the asset is retired from active use but not held for disposal. So first you read only this much. Depreciation should be charged if the asset is retired from active use but it is not held for disposal. But it is not held for disposal. So Raghuram was right in the previous question. So I have this projector. Okay, I have a Sony brand projector which is retired from active use. I don't use it actively. I use it rarely. I use it rarely. Like I have two cars, I-20 and I-10. So what I do? Mostly I use I-20. Rarely I use I-10. But I-10 is not held for disposal. I have not advertised on OLX that this I-10 car is now for sale. I have not put a hoarding outside my building wall, I-10 for sale, I-10 for sale. That is called held for disposal. It is not held for disposal. So depreciation will be charged. However, once the asset is fully depreciated, once the asset is fully depreciated, then of course I will not provide depreciation. If I-10 car cost is 4 lakh, residual value 25,000. So depreciable amount is 3 lakh 75. If I have already depreciated 3 lakh 75,000, then even uh, it is not retired from active use, or even if it is retired for active use, you are not going to provide depreciation, because whatever maximum depreciation I could have charged, I have already charged. Next point, where the production depreciation is based on production unit expected to be obtained from the asset, depreciation can be zero if there is no production. Oh my god. So I will take you to the example of projector. Projector life is 3000 hours, and we take classes, but since 1/4/2020 till 31st March 2021, due to lockdown, no physical class took place. No physical class took place. So if physical class is not happening, then I don't need projector. I can just show it on the laptop to the rest of the world. Okay, you will connect to my laptop, you can see what is happening on my screen, and this way I don't need a projector. So hours used, hours used in financial year 2021 is zero. What will be depreciation? Depreciation will be zero, because if I apply the formula 0 divided by 3000 into depreciable amount, the answer comes to 0 only. Because in case of such item where the useful life is based on production quantity, like hours or units, if there is no utilization, no production, depreciation will be 0. I hope this example was good enough to understand. Depreciation should be recognized even when the fair value of the asset exceeds the carrying amount. Important point. What is the example for this? This is suppose a building. Building was purchased for 50 lakhs 2 years ago. Building was purchased for 50 lakh 2 years ago. Today, today the market value of the building is 55 lakhs. That is fair value of this building today is 55 lakh. Now this company is saying that we cannot provide depreciation because fair value is more than the carrying amount. Is the company right? Building purchased 2 years ago for 50 lakh. Today its fair value is 50 lakh. Should we provide depreciation? Please reply. Should we provide depreciation? Option A, yes. Option B, no. Option A, yes. Option B, no. Cost of the building was 50 years, 2 years ago. Its useful life is 40 years. After 2 years, now this building has a value of 55 lakh. Building value can appreciate. So you need to reply whether I need to provide depreciation. The answer is yes. See the word, it is fair value. Fair value means the value of the building today. It is not residual value. If instead of fair value, had it been residual value, then the answer will be no, because then my calculation will give a negative answer. So Ganesh, Gupta, Moonrise, Chaurasia, Jatin, Gupta, Tanya, Raghuram. You people are right. Now tell me, 2 years ago, a building was purchased for 50 lakh. Today, its residual value is 55 lakh. Revised residual value estimate says 55 lakh. Residual value. Will you provide depreciation? Yes or no? Option A, yes. Will you provide depreciation? If the residual value exceeds the carrying amount. If the residual value exceeds the carrying amount, will you provide depreciation? Quickly reply yes or no. The answer this time is no, because mathematically depreciation will become negative. Depreciation will become negative. Usha, Sanket, Moonrise, you are right. Next point. Also, depreciation charge should be stopped on the occurrence of any of the two events. On the occurrence of any of the two events, first is asset is retired from active use and held for disposal. Underline held for disposal. Held for disposal means I have decided to sell it. I am not going to use it. Not going to use. And looking for a potential buyer. That is called held for disposal. If the asset is held for disposal, then depreciation is not charged on this asset. Then depreciation is not charged on this asset because now it is not going to be used. Or second situation, when you will not provide depreciation, which is easy, when the asset is derecognized. Derecognized means it is removed from the books. Removed from the books. I have sold it, for example, sold. Held for disposal means, so I will say, I want to sell my mobile phone. Anybody interested? I have put a notice also on the notice board, mobile phone held for sale. Interested party, contact the office. I have put an ad on OLX also, eBay also. Okay, that mobile phone is held for sale. I have given photograph, I have given the place to contact, phone number to contact. That is called held for disposal. Once I decide to dispose it, I will not provide depreciation because it is not going to be used. Okay. So depreciation meter will stop. Depreciation meter will stop. This is a stop signal. When you meet either of the two, it is held for disposal or the asset is derecognized. So this is a depreciation meter. So when will depreciation meter stop? When you come across either of these two scenarios, asset is held for disposal or asset is derecognized. Next point is factors to be considered in determining the useful life of a PPE item. This is a theory question. How do you determine the useful life of a property, plant and equipment item? Suppose this is an Indica car. This is an Indica car. It is used by a doctor. Same Indica car is used by a tour and travel company. Tour and travel company. What doctor will do? Doctor will use this car to go from home to hospital, hospital to home, and the gap is only 2 kilometers from the hospital. So every day he will drive 2 kilometers, 2 kilometers, 2 plus 2, how much is that? 2 plus 2, 2 plus 2, 2 plus 2, 22. Oh, 2 plus 2 is how much? 10. So 2 plus 2, he drives 4 kilometers, and doctor drives very carefully, slowly, at the speed of 30 kmph. Tour and travel company, they drive this car almost 12 to 18 hours a day, 365 days. They drive at the speed of 120 kilometer per hour. Now you have understood the question. Useful life of car for driver. Useful life of car for the doctor and tour operator will be dash A same, B different. Quickly reply whether the useful life will be same. Car is same, Indica car, same model, same price, both purchased on the same day. Who will assume a higher useful life and who will assume a lower useful life? Come on, reply. Doctor will take a higher useful life or the tour operator will take? So the answer is it will be different. Sanket, Sakshi, Usha, Tanya, Chaurasia, Kalyan, Khushbu. So all of you are saying the useful life will be different. Then how did you come to that decision? I had not told you what you have to take into account. So one has to see the expected usage of the asset. A doctor uses 4 hours a day, 4 kilometers per day, 5 days a week. A tour operator 12 to 16 hours per day, 365 days a week. So wear and tear is also an important factor. In case of tour operator, the car will have more wear and tear, whereas in case of doctor, he will maintain the car properly. So doctor can assume a longer useful life as compared to a tour operator. Then one can also look into technical or commercial obsolescence also. Like if you buy a laptop, one has to keep in mind that this laptop may become obsolete after some time. So let us say after 3 year, every 3 year new technology comes. So maybe you will take into account the fact that technology may change. So 3 years. Sometime there can be commercial reason also. You are suppose a delivery company, a company into delivery of goods to the customer business. So you are delivery company called delivery. So they have got trucks, vehicles to deliver goods. They are like courier company. They want to ensure that these trucks, vehicles and other delivery vans are in good condition. Otherwise, they will not be able to deliver on time. So because of the commercial reason, to ensure that the delivery is made on time, they may choose 5 year, and after every 5 year they may change their vehicles so that there is no breakdown, there is no delay, and the customer is given services on time. That is commercial obsolescence and legal. Now in India, many vehicles have to be compulsorily sold, discarded, disposed after 15 years. So therefore, the law may also limit the useful life of an asset. Legally also, the useful life can be affected. The useful life can be shorter than economic life. I had told you that I have a laptop. I will use for 3 years. Then I will sell it to Moonrise Limited. Moonrise Limited will use for Moonrise Limited will use for 3 years. So for me, useful life is 3 year, but the economic life of this laptop is 3 plus 3, that is 6 years. Estimation of useful life is a matter of judgment. Very good statement. Nobody really knows what is the useful life exactly. I will ask you a question. You have probably a two-wheeler with you. All of you, those who have two-wheeler will answer how many years you are going to use that two-wheeler. For how many years you will use. Say that the two-wheeler is Activa. All of you suppose own an Activa. For how many years you are going to use? Let us reply and you will see the answer on the screen only, that useful life is a matter of judgment. One person may say 3, one may say 5, one may say 7, one may say 20 also, 15 also. So start answering. Who will use an Activa and for how many years? Kalyan is saying 10 year. Raghuram, Prithvi is saying 20. Oh my God, you are going to use an Activa for 20 years. Activa will start driving over you. Okay. Thanga Lakshmi Surya 10 year. Okay. So this is my point. I have demonstrated live that your estimation of useful life is a matter of judgment, because I got multiple answer from our student. Somebody said 8, 10, 12, 15, 20. So the answer is varying from 8 to 15 or 8 to 20. If you have acquired land and building, in yesterday's lecture also I have told you, they should be accounted separately. They should be accounted separately. Chetan is saying 9 year. Chauhan is saying 8 year. Very good. Now stop. If you purchase building and land, this is my office, okay, in New York. So I have purchased it together. What will I do? I will have to separate land from the building. The reason being, Land is not depreciated. Land is not depreciated. Land is not depreciated, but building is depreciated. Why land is not depreciated? Because land has got unlimited useful life. Land has got unlimited useful life. So if it is unlimited useful life, the formula for depreciation will give you zero answer. Cost minus residual value divided by n, number of years. But if number of years are infinite, cost minus residual value divided by infinity, the answer is zero. Nabil Ahmed is asking land is depreciated how? Oh, sorry, zero depreciation on land. You are right. This is the mathematics. Mathematically, any number divided by infinity is zero. But if land has limited useful life, then land will also be depreciated. If land has limited useful life, then land will be depreciated. For example, landfills, that is the land taken for dumping waste for some years. So therefore, if the land has a limited life, then we can take depreciation on land also. So if somebody has told you zero depreciation on land, that is in general you are right, but you must write a exception. The exception is if land has a limited useful life, then it is to be depreciated. Example, landfills, where you take up land for dumping waste material and then you sell the land. So next is building has a limited useful life. Even if it is 90 years, 50 years, building will be depreciated. What is the method of depreciation that this standard has recommended? This standard says depreciation method will reflect the pattern in which future economic benefits are expected to be consumed by the enterprise. This is the principle that you should depreciate according to the future economic benefit the asset is going to generate for you. If the asset is going to generate more future economic benefit in the earlier year and less future economic benefit in the later years, then one can use WDV method. If the asset will generate equal future economic benefit in all the years, then one can apply straight line method. So therefore, more than one method of depreciation is possible depending upon how the enterprise consumes the future economic benefit generated by the asset. Okay, like how the outputs are generated. So this standard says, AS-10 says, one can follow either SLM or WDV or unit of production method. In 11th and 12th standard, they teach you SLM, they teach you WDV. What is unit of production? Unit of production means number of units produced divided by expected total units into depreciable amount. Proportionately. Proportionately. The answer is proportionately. Like I gave you example of my projector. My projector total life is 3000 hours and I have used 600 hours in this year. I have used 600 hours in this year and the depreciable amount is 50,000. So tell me what will be depreciation? 600 divided by 3,000 into 50,000. Come on. Answer. What will be depreciation? So this should be 20% of 50,000, that is 10,000. This is called unit of production method. This is called unit of production. This is called unit of production. Next is, an enterprise must select that method which more clearly reflects the expected pattern of consumption. That is the repetition of this line. That method you should choose which reflects the future economic benefit pattern consumption. Now, the standard says depreciation method should be reviewed at least each financial year end, because again the situation, the circumstances can change and we might have to revise our method of depreciation. So before corona you were following SLM, after corona is over you might follow WDV because your benefit may start falling. If there is a significant change in the economic benefit pattern consumption, this method should be changed. So the standard allows you to change the method of depreciation. You can change from SLM to WDV, or you can change from WDV to SLM, depending upon how your future economic benefit will be consumed. So example can be before 1/4/2020, company may be following SLM, but from 1/4/2021, the company may decide to follow WDV because the pattern of consumption of economic benefit has changed. Will it be called as a change in accounting policy or change in accounting estimate? So this is a big change in AS-10. Earlier, accounting standard 6 used to say, if you change the method of depreciation, it will be called change in accounting policy. Now this standard is saying that if you change the method of depreciation, it will be called change in estimate. So how does it matter? The effect is prospective. If it is change in estimate, the effect will be prospective. Then the student is asking how many times can it be changed? How many times? Usha is asking, can we change it more than 2 times? Any number of times. Standard does not put any restriction on you. Okay. So 2020 SLM, 21 WDV, 22 SLM, 23 WDV. But then your auditors are going to ask you the question, your shareholders are going to ask you the question, and then you have to justify them, why are you changing every time? So it's not very easy. Theoretically it seems okay, practically company won't change much. Nobody has so much time and energy to do that. Now in order to keep you busy, I am going to give you one question. Do you want to write? Say yes or no. Otherwise, we can ignore it. I have found out different questions for you. Please write down the question. Do you want to write first? If you don't want to write, why I am wasting my time? I can complete the syllabus, go home, watch. What will I watch today? I won't tell you. We know Limited, owns an asset cost rupees 2 lakh. We know Limited owns an asset cost rupees 2 lakh. Exam question, exam type question for 4 to 5 marks. On acquisition, please write fast. Everybody is saying we want to write. Please write. On acquisition, management determines, or you can take a photo if you want. Choice is yours. On acquisition, management determined that the useful life was 10 years. Management determined that the useful life was 10 years and the residual value to be rupees 20,000. And the residual value to be rupees 20,000. The asset is now 8 years old. The asset is now 8 years old. Come on. Asset is now 8 years old. Quickly. At the end of year 8, management has reviewed the useful life. Management has reviewed the useful life and residual value and has determined that the useful life can be extended to 12 years. The useful life can be extended to 12 years in view of the maintenance program adopted by the company. In view of the maintenance program adopted by the company, as a result, the residual value will reduce to rupees 10,000. So there are two things they are changing, useful life and residual value together. How would the above change in estimate be made by B Limited? Question is how would the above change in estimate be made by B Limited? Today's homework. All of you will honestly try all questions. Now you are in a position to solve all questions. All questions homework. Sit down for 2 hours and complete all questions given to you, and then if you get any question on AS-10 you will be able to answer. So now first I will explain year 0, year 8, 10, 12. So cost was 2 lakh, residual value 20,000. So depreciable amount was 1,80,000. Life 10 years. So divide by 10. So depreciation originally estimated was 18,000. So you have already depreciated the asset for 8 years. So total depreciation you have provided is 18,000 into 8, 1,44,000, and the carrying amount now is 56,000. 2 lakh minus 144 is 56,000. But now the life has been revised to total 12 years. So remaining life is 4 years, and the residual value is also revised to 10,000. My question is, how much depreciation they will provide in year 9, 10, 11 and 12? How much depreciation per annum they are going to provide in the last 4 years now? Carrying amount is 56,000, remaining life is 4 year, and the revised residual value is 10,000. Come on, everybody. How much will be the depreciation charge, and it will be prospective or retrospective? Whether the revision in the depreciation will be prospective or retrospective, and how much depreciation would be charged in year 9, 10, 11, 12. Assume straight line method. Assume straight line method. So you will first take 56,000 minus 10,000 divide by 4. So 11,500. Sanket, Saurav, Chauhan, Moonrise, Chaurasia, Raghuram, Usha. So the answer is 11,500, and the effect will be given prospectively. So dear student, please write the answer in good handwriting. Write down good handwriting, just 3-4 lines. Solution, write down. How will you write the answer in the exam? Ranjit Gogoi, prospectively we will provide 11,500. You are right, Gogoi. Gogoi. So first write down annual depreciation is equal to depreciable amount upon useful life. First write formula. Ganesh ji, Jai Ganesh, you are right. Jai Ganesh, you are right. Depreciable amount originally 2 lakh minus 20,000 divide by 10. That is, originally we were providing 18,000 per annum. 18,000 per annum. 18,000 per annum. Now write down. Now write down annual depreciation. Annual depreciation, accumulated depreciation. Accumulated depreciation will be 18,000 into number of years, 8 years. So that is equal to 1,44,000. After 8 years are complete, you have provided 1,44,000. Presentation is important. Carrying amount of the asset at the end of year 8. Come on. Carrying amount of the asset at the end of year 8 is 2 lakh minus 1,44,000. 2 lakh minus 1,44,000, and that is equal to 56,000. Now write down note. Note, write down revision of the useful life to 12 years results in a remaining useful life of 4 years. Revision of useful life to 12 years results in a remaining useful life of 4 years. That is 12 minus 8. 12 minus 8, 4 years. Revised depreciable amount. Revised depreciable amount will also change. Revised depreciable amount will become now 56,000 minus 10,000. 56,000 minus 10,000 is 46,000. Therefore, write down therefore, depreciation to be charged. Therefore, depreciation to be charged in future years. Depreciation to be charged in future years is 46,000 divided by 4. 46,000 divided by 4. And that comes to 11,500 per annum. That comes to 11,500 per annum. So this is a question, and you will find similar questions in your notebook, in your notes for practice purpose. So today you will promise me, say we promise, start at your home. We promise that we will do the entire chapter today. Do the entire chapter today fully without before sleeping. Okay, so after the promise you have given to me, we'll go to another concept called change in existing decommissioning, restoration, and other liabilities. Can the decommissioning obligation change? What is decommissioning obligation? Understand, year 0, 40 years. You are constructing a nuclear power plant. You are constructing a nuclear power plant, and after 40 years, you have a decommissioning, restoration, and other liability, which in short I will write DROL, drawl. Decommissioning, restoration, and other liabilities, drawl. Okay. So if you remember, we have taken a question of this kind where we had calculated the present value of decommissioning, restoration, and other liabilities. Do you remember? First, you said, do you remember? I had given you one question of this type. I don't know the numbers, but we had estimated something like 1 crore 50 lakh will be incurred in decommissioning after 40 years, and the present value was something around 2 lakh 50,000. There was some question covered 1 or 2 days before. And then what we will do, on this date we'll pass an entry PPE account debit to provision for decommissioning, restoration, and other liability, 2 lakh 50,000, 2 lakh 50,000. And then every year I am going to add finance cost to provision account. So every year I am going to pass an entry finance cost account debit to provision for decommissioning, restoration, and other liability. So these entries will continue, and this PPE will be depreciated as usual, depreciation to PPE. Whatever is the useful life, you will depreciate the PPE. So now you remember. Very good. The problem is, you are standing here today, year 0, and you are estimating how much amount will be incurred to restore the surface or the area after 40 years. So this is an estimated number. An estimate can change. Estimate can change. So now the problem is, after some years, your estimate may change. So let us say 10 years are over. 10 years are over. After 10 years, I have a PPE account. The balance will be opening balance minus 10-year depreciation. I will have a provision account, provision for decommissioning, restoration, and other liability account. This will be equal to opening balance plus finance cost provided for 10 years plus finance cost provided for 10 years, because every year I am going to add the finance cost. So this is my position here after 10 year. But the problem is this estimate may change. Oh my God. You may think no, 1 crore 50 lakh is not a correct estimated figure. It should be 1 crore 55 lakh. You think that the material cost may go up, the labor cost may go up, or any other technology cost may go up, or even the discount rate may change, because it was based on certain discount rate, so that can also change. So my decommissioning obligation has changed here. This is my book value. I will compare it with the revised value. Based on revised information about decommissioning liability, discount rate, etc., I will calculate the revised value of my decommissioning, restoration, and other liability. Fresh calculation. Compare it with book value. This is book value appearing in my ledger. This is my revised calculation, and then I will compare. My liability can increase or decrease depending upon how the numbers have changed. Now the question is, if this revised value, of decommissioning liability is greater than or less than the book value of the liability, is greater than or less than the book value of the liability, what is the accounting treatment for that? What is the accounting treatment for that? So book value may be now, let us say 5 lakh rupees, but the revised liability may be 5.50 lakh or maybe 4.90 lakh. So I need to do the adjustment of that difference. I need to revise my liability either to 5.50 lakh or 4.90 lakh in our example. So how do I pass the journal entry? Where will the difference be recorded? That is the question. Liability will be credited if I have to increase it. Liability will be debited if I have to decrease it. But where will the debit effect go? That depends on many things. So we will discuss one by one, and I will dictate one more question here for you. The cost of an item of PPE may undergo changes subsequently due to price adjustment, duties, initial estimate of dismantling cost. Underline initial estimate of dismantling cost. So such changes are accounted as follows. For last 2 days you are learning. For accounting of PPE, a company can either follow cost model or it can follow revaluation model. AS-10 has permitted two methods of accounting: cost model, revaluation model. So if suppose the company is following cost model, then calculate the revised decommissioning, restoration, other liability, compare with book value of provision for decommissioning, restoration, and other liability, and then compute the change. Compute the change. What is my book value? What is my revised value? By what amount the liability has changed? The change in the liability will be added to or deducted from the cost of the related asset in the current period. So if I am following cost model, if the provision for withdrawal changes, I am going to adjust the related asset account. I am going to adjust the PPE account. So if the liability increases, pass this entry. If the liability increases, you will record this entry PPE account debit to provision for decommissioning expense. But if the liability decreases, you will pass the entry provision for decommissioning expense account to PPE account. Understood? Look at these two entries carefully. Very simple. Liability increases, PP will be debited, liability will be credited. Liability decreases, liability account will be debited, PP will be credited. But there is some problem here. Problem is that if you debit PPE, its value goes up. But we have to ensure that the value does not go up beyond recoverable amount. The value should not exceed recoverable amount, because if the recoverable amount you can recover from that asset is 1 lakh, you can't increase it to 5 lakh rupees. Should not exceed recoverable amount. And see the problem with this entry, if you pass this entry, PP balance should not become negative. Oh my god. So what they are trying to say, you are crediting PP account, so it should not become negative, because if balance left in PP account is 20,000 and you are crediting it by 1 lakh, then there will be a negative balance. So in both cases, if the value has to increase, it should not exceed recoverable amount. If the value has to decrease, it should not become negative. So the standard says, however, the deduction should not exceed the carrying amount. If the decrease in liability exceeds the carrying amount, the excess should be recognized immediately in the profit and loss account. So now suppose listen to me, the carrying amount of the PPE is 200 rupees, but the decrease in the liability is 500 rupees. Decommissioning liability has reduced by 500 rupees, but the balance in PP account itself is 200 rupees. So I will credit PP 200, remaining 300 I will credit P&L account, because I can't make PP account negative. So excess or the difference between the deduction in liability and the carrying amount of the PPE, we will credit it to P&L account. And similarly, if there is an increase in liability, asset will increase, the enterprise should consider if this is indication that new carrying amount may not be fully recoverable. So as I said, should not exceed recoverable amount. Should not exceed recoverable amount. Should not exceed recoverable amount. And if it exceeds the recoverable amount, it will be treated as impairment loss and it will be transferred to P&L account. So here the journal entry would be PPE account debit to provision for decommissioning expense. Suppose the provision for decommissioning expense I have to increase by 1000 rupees. But I can increase the PP account only by 600. Otherwise, if I debit more than 600, it will exceed the recoverable amount. If I debit more than 600, it will exceed the recoverable amount. So the standard says, don't worry, the remaining you can debit to P&L account. If you can't pass entry for more than 600 in PP account, then the remaining amount you can debit to P&L account, and this will be treated like an impairment loss. This will be treated like an impairment loss because the value cannot exceed the recoverable amount. If the value cannot exceed the recoverable amount, we call it as impairment loss. Now, this is a little complex accounting of decommissioning liability, usually not asked in intermediate exam. But what they don't ask is more important. What they ask is important, but what they don't ask, but it is a part of your syllabus, they can suddenly ask you, and then you will be caught unaware, and the 10-mark answer you can't give. So I am going to dictate a question on change in decommissioning liability, and the entity follows cost model. So with example, the concept will become permanently clear. So do you want to write a question on change in decommissioning liability? First tell me that. If you will say yes, then I will dictate. Otherwise, why will I waste my time? I can go home early and I can watch, but I will not tell you what I am going to watch today. Okay. So Sanket is saying, sir, you can start. I will start. Write down. Please write one important question. An entity has a nuclear power plant. Oh my God. Entity has a nuclear power plant. Sonam saying yes. Prithvi, yes. Neelam, Usha, Chaurasia. Company has a nuclear power plant and a related decommissioning liability. And a related decommissioning liability. Tanya, yes. Nuclear power plant started operating on, please write fast or take a photo if you want. Nuclear power plant started operating on 1st April 2017. Nuclear power plant started operating on 1st April 2017. The plant has a useful life of 40 years. The plant has a useful life of 40 years. Its initial cost was rupees. Its initial cost was rupees 1,20,000. Its initial cost was rupees 1,20,000, which included which included an amount for which included an amount for decommissioning cost, included word underline. So 1,20,000 includes, don't further add 10,000, includes an amount of decommissioning cost of rupees 10,000, includes an amount for decommissioning cost of rupees 10,000, which represented rupees 70,400 in estimated cash flows payable in 40 years, discounted at a risk adjusted rate of 5%. So that is discount rate is 5%. Discount rate is 5%. If you calculate present value, you will get approximately 10,000. You can try later. Next line, the entity's financial year ends on March 31st. 31st. The entity's financial year ends on March 31st. On March 31st, 2027, on March 31st, 2027, value of the decommissioning liability, value of the decommissioning liability has decreased by rupees 8,000. Value of the decommissioning liability has decreased by rupees 8,000. Has decreased by rupees 8,000. The discount rate has not yet changed. The discount rate has not yet changed. Last line of the question: how the entity will account for the above change in decommissioning liability, how the entity will account for the above change in decommissioning liability if it adopts cost model. If it adopts cost model, what will be the revised depreciation? What will be the revised depreciation? What will be the revised depreciation? Okay. So I hope all of you have noted down the question. I am going to read it and explain it to you one more time and then we'll solve together. An entity has a nuclear power plant and a related decommissioning liability. So the name of the PP is power plant and the company has created a decommissioning liability. 1st April 17 is the starting date, useful life 14 years. Its initial cost is 1,20,000, which included, underline included, an amount for decommissioning cost of 10,000. How this 10,000 has come? Now try on your calculator, type 70,400, which is the estimated decommissioning cost after 40 years. 7,400 divided by 1.05, press equal to 40 times, 40, and tell me how much is the answer. Tell me how much is the answer. Exactly tell me how much is the answer. Anybody wants to answer? Use your calculation. Nobody wants to reply. Okay, it's a time consuming calculation. So your institute was kind enough to give you the answer. Why I am telling you, suppose they don't give you that 10,000 rupees figure, then you'll have to take this 7,400 divided by 1.05 to the power 40, and the students have confirmed that they are getting around 10,000 rupees. If you are getting slightly different answer, it is because the institute have rounded off this. Okay. So on day one, understand, sorry, on day one, when the asset was acquired, the PPE balance is 1,20,000 and the provision account has a balance of 10,000 rupees. So this is the starting number of these two account. Now it says the entity's year ends on 31st March. On 31st March 17, and this is, sorry, 27, 10 years are over. If 10 years are over, my question is, What is the balance in PPE account after 10 years? So 1,20,000 minus depreciation for 10 years, minus depreciation for 10 years, and the useful life is 40 years. So depreciation for 10 year will be 1,20,000 divided by 40 into 10. So anybody who would like to tell me, then you can understand. 1,20,000 divided by 40 into 10 is equal to 30,000 rupees. So 1,20,000 minus 30,000 will be 90,000 rupee is the carrying amount of PPE. 90,000 is the carrying amount of PPE. Okay. What is the carrying amount of provision for decommissioning account? Anybody who will give me the correct answer will get a prize. Carrying amount of provision for decommissioning account is equal to how much? How much? How much? Come on, dear student. What will be carrying amount of provision for decommissioning? Very easy. Your starting number is 10,000 rupees. Starting number is 10,000. 10 years are over. You have to add 5%, 5%, 5% on cumulative basis 10 times. Okay. So the carrying amount of provision for decommissioning expense would be, you will take 10,000 and you are going to add 5% every year. So let us say after 1 year it will become 10,000 into 1.05 and to the power 10, because now we have to move towards future. We have to add 5% every year, plus 5%, plus 5%, plus 5%. 10 times if you do, you will get the carrying amount of provision for decommissioning expense. So this comes to, somebody said 16,289. Jan 16,289. I will check. I don't remember the answer. My memory capacity is 100 terabyte, but still I cannot remember everything. Memory hard disk is 100 TB only. So most of you got the same answer. So I will ask my computer G to give me the answer. So these are my balances in the books after 10 year. And then after 10 year, the decommissioning liability will reduce by 8,000. Since it has written decreased, the entry will be provision account debit 8,000 to PPE account 8,000. And once you reduce the PPE account by 8,000, the revised amount will be depreciated over the remaining useful life. The revised amount will be depreciated over the remaining useful life. So let us see. Okay, Ranjit Gogoi has given me one answer, 15,005. He has removed also before I could write anything. Anyway, so please write down the answer for this very, very important question. If it is asked in the exam, it will be 8 to 10 marks. Those who have done before going to the exam can solve it. Others will just struggle. On 31st March 2027, the plant is 10-year old. On 31st March 2027, the plant is 10 years old. I am writing in simple language so that you can understand. Accumulated depreciation equal to 1,20,000 divide by 40 into 10, 30,000. Then write down decommissioning liability account. Decommissioning liability account on 31st March 2027. Decommissioning liability account on 31st March 2027 is equal to 10,000 into 1.05 to the power 10. I have rounded off to 16,300, or you can write 16,289. This is also right. You can go with this number also. 100% right. Or you can round off if you want to 300 rupees. Then write down next line, the entity estimates that the net present value the net present value of decommissioning liability has decreased by rupees 8,000, has decreased by rupees 8,000. Accordingly, the entity adjusts the decommissioning liability. This way you will present in the exam. Accordingly, the entity adjusts the decommissioning liability from rupees 16,300 to rupees 8,300. Now, how this 8,300 has come? Those who want to write in bracket 16,300 minus 8,000. So now the revised liability is 8,300. So journal entry to reflect the change. What journal entry we will pass? My liability is reduced by 8,000 rupees. Decommissioning liability account debit. Decommissioning liability account debit 8,000 to PPE account or to nuclear power plant account, whatever name you want to write, 8,000. 8,000. Have you written? Now write down revised carrying amount of the asset. Revised carrying amount of the asset. Original cost 120 minus this 8,000 reduction minus this 30,000 accumulated depreciation. Therefore, now the PPE account will have a balance of 82,000 and the remaining life is 30 years, 40 minus 10. So, for the remaining 30 years, the depreciation charge will be, write down, depreciation charge over each of the remaining 30 years of the asset's life, over each of the 30 years of the asset's life is 82,000 divided by 30. 82,000 divided by 30 is 2733. 2733. So this would be your depreciation. For year 11 to 40, the annual depreciation charge will be 2733. Then write down the next year's finance cost for the unwinding of discount, or just write down next year finance cost. Just write down next year finance cost will be, now it is 8,300 into 5%. 8,300 into 5%. This one. So next year finance cost will be 415. Next year finance cost will be 415. Sorry. Next year finance cost will be 8,300 is your revised liability. Discount rate is 5%, and the problem says discount rate has not changed. So next year you will provide 415. Next year you will provide interest cost of 415. Next year you will provide. So this will be your question in the exam. What will be the revised depreciation and what will be the finance cost of the 11th year, and what journal entry will you pass? So accordingly you will write this answer. Now this question is based on cost model. This question is based on cost model. Company follows cost model for accounting of PPE. Has everybody completed? Has everybody completed? Say yes or no. If you have said yes, then I will go to next discussion. Next is, the topic is change in decommissioning liability. And now the entity is following revaluation model for that asset. Entity is following revaluation model for that asset. So then what we will do? The change in the liability are treated in the same way as a revaluation increase or decrease. So if the asset is a revalued asset, company is following revaluation model, the change in liability is also treated as revaluation increase or decrease. Change in the liability is also treated as a revaluation increase or decrease. But we have to do some adjustment. If the decrease in liability, if suppose the liability decreases, exceeds the carrying amount that would have been recognized under cost model. If the decrease in liability exceeds the carrying amount that would have been recognized under cost model, the excess should be recognized immediately in the profit and loss account. The excess should be recognized in profit and loss account. Write down this example to understand this point. Write down the example. There is a decrease in liability, and if it is more than carrying amount that would have been recognized under the cost model. Had you followed cost model, what would have been the carrying amount? So the decrease in liability exceeds the carrying amount that you would have calculated under cost model. That excess amount will be transferred to P&L account. Write an example. Decrease in liability is 1000 and the notional carrying amount. Notional carrying amount means carrying amount that would have been recognized under cost model. Carrying amount that would have been recognized under cost model. Suppose had you followed cost model, what would have been your carrying amount? Your carrying amount suppose would have been 600 rupees. Then in that case 400 rupees excess will be transferred to P&L account. So journal entry, write down. Journal entry. Provision for decommissioning expense account debit 1000. Provision for decommissioning expense account debit 1000. That is your reduction in liability. To P&L account. Difference between decrease in liability and the notional carrying amount And notional carrying amount means carrying amount if the company would have followed cost model. So that excess amount is treated as a gain 400 and revaluation surplus remaining 600 goes to revaluation surplus. This is treated as deemed revaluation. This is treated as a deemed revaluation because treatment of in case of revalued asset, change in liability is treated as a revaluation. However, if the decrease in liability is more than the notional carrying amount, that excess is treated as profit and loss, and balance amount is treated as revaluation and transferred to revaluation reserve. So first of all, a good news, such questions are not asked in the exam, so don't take much tension. This is the little advanced part of this standard. Still, it was my duty to explain it to you, so I have done it. Now, a change in the liability is an indication that the asset may have to be revalued so that the carrying amount does not differ materially from that which would be determined using fair value at the balance sheet date. So the logic is that if you are following revaluation model, change in liability is also treated as a revaluation and hence adjustment is done. Next point, the adjusted depreciable amount is the adjusted depreciable amount of the asset is depreciated over the remaining useful life. Adjusted depreciable amount, as usual, if the assets carrying amount has changed, the revised carrying amount will be depreciated over remaining life. This also implies that once an asset reaches the end of the useful life, all subsequent change in liability should be recognized in the statement of profit and loss as they occur both under cost model and revaluation model. So this simply means once the useful life is over, once the useful life is over, the change in liability, will be recognized in P&L account. Once the useful life of an asset is over, the change in decommissioning liability will be recognized in P&L account because as far as asset is concerned, its useful life is over. So you need to simply transfer the difference to P&L account. So on revaluation model, we don't have much question. Next point is impairment of an asset. Good news. Impairment of an asset is covered by AS-28. Impairment means reduction in value. However, this is altogether a different chapter, not applicable for your syllabus right now. Point number B. In respect of an item of PP which was impaired, lost or given up. Suppose there was a fire and the asset was lost and you have taken an insurance cover for that. Fire, loss, you have taken insurance cover. What is the treatment of the insurance claim receivable? What is the treatment of the insurance claim receivable now? So the entry will be where compensation is available from third party, such compensation should be included in the statement of P&L account. So insurance claim receivable will be written or credited to P&L account if the asset is damaged and the claim is receivable, subject to when the compensation becomes receivable. Compensation becomes receivable means the insurance company or other party from whom the claim is to be recovered has approved it. Insurance company or other party has approved the claim. So insurance claim receivable, once it is approved by the other party, for the loss or damage of PPE will be credited to P&L account. On this, I have a question for you. Do you want to write? Yes. If you want to write, write down. Question for you. If suppose there is a damage to PPE and you are going to receive claim, what is the treatment? Question, write down. Question, write down. X Limited has a machine. X Limited has a machine which got damaged, due to fire, as on 31st January 20x1. As on 31st January 20x1. The carrying amount of the machine, was rupees 1 lakh. The carrying amount of the machine was rupees 1 lakh on that day. On that date, X Limited sold the damaged asset. X Limited sold the damaged asset as scrap for rupees 10,000. Sold the damaged asset as scrap for rupees 10,000. Then you write, X Limited has insured the same asset. X Limited has insured the same asset against damage. X Limited has insured the same asset against damage. As on 31st March 20x1, the compensation proceed was still in process. The compensation proceed was still in process, but the insurance company has confirmed the claim. But the insurance company has confirmed the claim. Compensation of rupees 50,000 is receivable from insurance company. It is confirmed by insurance company, so you can record it. How X Limited will account for the above transaction? How X Limited will account for the above transaction? How X Limited will account for the above transaction? Question is very easy. There are two things you have to record. One is loss. Machine carrying amount was 1 lakh, sold for 10,000. So 190,000 loss will be recognized. At the same time, this 50,000 compensation received will also be recognized as income because the claim has been confirmed by the insurance company. Is it right? Dear student, is it right? Loss of 90,000 due to sale of damaged machine and 50,000 rupees as compensation claim. So please write down the answer in few lines only. Please write down the answer little fast. X Limited should account for the above transaction as follows. X Limited should account for the above transaction as follows. At the time of sale of scrap machine, at the time of sale of scrap machine, X Limited should write off, X Limited should write off the carrying amount of the asset, should write off the carrying amount of the asset from the books of account, from the books of account, and provide a loss of rupees 90,000, and provide a loss of rupees 90,000, that is carrying amount of rupees 1 lakh minus realized amount, minus realized amount of rupees 10,000, minus realized amount of rupees 10,000. Then next line write down, as on 31st March 20x1, as on 31st March 20x1, X Limited should recognize, X Limited should recognize the compensation receivable, should recognize the compensation receivable, should recognize the compensation receivable in its profit or loss. Any query on this? If you have done, tell me yes, we have done. Now only 2 minutes are remaining, and then this chapter will be over. Okay, done everybody? Please let me know once you have done writing this answer. Similar questions have been asked in the exam for 4 marks. And today your homework is you will complete the entire chapter. All questions you will solve. Next part of this chapter is retirement. This we have discussed some time back. If the asset is retired from active use and held for disposal, retired plus held for disposal, HFD, that means I have kept this laptop separately, I don't use it, I have put a tag on it, available for sale, pay the price, take the laptop. So I am not using it. So since I am not using it and I am going to recover the amount by selling it, the standard says stop providing depreciation, and it will be valued at carrying amount or its net realizable value. Carrying amount or its net realizable value. So if somebody asks you how will you value an asset which is retired from active use and held for disposal, lower of the two, suppose this laptop's carrying amount is 1 lakh and I am going to realize only 80,000 rupees, I will value it at 80,000 and 20,000 loss I will transfer to P&L account. Okay. So any write down in our example 20,000 will be recognized in P&L account. Now next is derecognition. Derecognitions mean removing PPE from books of account. Removing PPE from books of account. And when will you derecognize an asset? So if either of the following two events happen, I will remove the PP from the book of account. One is simple, when you sell the asset on disposal, when you sell the asset, dispose it. Now you will remove PP from the book. And secondly, no future economic benefits are expected from use or disposal. So if you are not going to get anything from that, If you are not going to receive anything from using or even sell, it is totally useless for you now. That means you will just throw it. Since you are not going to get anything out of it, you will derecognize. Okay? So when there is no future economic benefit left in the asset, derecognize. Any gain or loss, any gain or loss on disposal will be recognized in P&L account. So every time if I have to recognize a loss on P&L account or gain, we will recognize it in P&L account. Gain should not be classified as revenue. So somewhere in your notes it is written, this gain on sale of PPE is not a revenue because it is not from operating activity. Why it is not revenue? It is not from operating activities, normal operating activities. So this gain will be shown in other income, not in revenue, or you may show it in exceptional item, Gain on sale of PPE or loss, you can put it in exceptional item or other income, but not in revenue from operation because it is not revenue from ordinary activities. Okay. Now the last part is disclosure. I will read few lines and remaining lines you will complete as homework. So this is the last part of this chapter and I have tried my best to cover it in detail, and as a good student you have to now practice more question. So disclosure requirements are: financial statement will disclose for each class of PPE measurement basis. Are you using cost model or evaluation model? Disclose depreciation method. Are you following SLM or WDV? Disclose the useful life or depreciation rate used. That also you have to disclose, useful life or depreciation. In case if they are different from those specified in the statute governing the enterprise, it should make a specific mention of that fact. Like you have schedule 2, which gives you depreciation rates. If you are using different than rate given in schedule 2, you have to disclose. Then you have to disclose the gross carrying amount, accumulated depreciation, accumulated impairment loss at the beginning and at the end of the period. And you have to give a reconciliation of carrying amount from the beginning till the end, which means you will take opening balance, all additions, deductions, and it should be equal to closing balance. Similar requirement is there in schedule 3 also. You will show addition. You will disclose asset retired from active use and held for disposal. You will disclose asset acquired in business combination, means mergers and acquisition. Increase or decrease resulting from revaluation and from impairment losses. Recognize or reverse directly in revaluation surplus. Impairment loss. This you have not studied, so I will not speak much. Depreciation. Net exchange difference arising on translation of financial statement of a non-integral foreign operation with AS-11. This AS-11 is for next lecture and other changes. Remaining disclosure read as homework. These are the main disclosures which I have read. You have to remember 10 or 12 points out of this. If they ask you disclosure requirement of AS-10, this is what you have to disclose. So this standard is over. Please practice all question. Any doubt you can ask me. Thank you very much. Bye bye.